Welcome to the Flow Tracy Money Audio Commentary. This is Owen Tracy recording, and it is 3:32 p.m. and that is Central Time. And today is November 21st. I thought we'd kick off with gold. It was up nearly $20 today, approaching the $2,000 level once more, testing the upper side of the 3-year range, and that's amid a weaker dollar and a somewhat lower real interest rate. So those are the two big catalysts for gold bull markets generally, and they appear to be falling into place. So we're not going to have full confirmation of that until gold does complete a move on the upside, up through the $2,000 level, and then sustains it, but it's certainly looking more positive than it has done. Silver prices are also steadying. They haven't quite yet broken the sequence of lower rally highs, and it's exactly the same situation with both platinum and gold miners. In here today, we had the ECB talking about that they're not done with their tightening program yet. They are not going to cut rates until they see inflation going back down to the 2% goal. And, well, they're a long way from that. And they're a long way from their other goals as well, because the deficits in several European countries are a long way from target, and debt to GDP is even further away. So Europe certainly has its hands full with attempting to get that inflationary bias down. But the higher they leave interest rates and for the longer they do that, that is going to have the desired effect. And of course, eventually there will be deflationary forces. Then we also had Nvidia's earnings, and those earnings were positive, and they were quite a bit stronger than what was anticipated, except that the guidance wasn't great, and that they anticipate that demand in China is going to moderate significantly in the fourth quarter. They also anticipate that the rest of the world will pick up the slack, but that does not imply growth. That's basically holding steady, and with the valuation where Nvidia's is right now, well, that's ambitious. So certainly a lot to digest in here. And then when we look at the broader markets, the big question, I think, when we think about a declining dollar is, if the dollar is going to go down, well, then what goes up? And some currency has to go up. But there is no likely candidate that's willing to tolerate a very strong currency. But I think what we're beginning to see in the markets is an answer to that question. And it's not one currency that's going up, it's basically all of them. And then we also have the aftershock of Javier Milei winning in Argentina, and now he has the gargantuan task of passing a reform agenda through Parliament where he does not have a majority. So that is certainly something that is worth watching, because the one thing that Argentina excels in is in disappointing anyone who is hopeful for reform. So I think there is reason to be hopeful, but we certainly need to see some substantive moves and success in handling what is likely to be an intransigent parliamentary process. Then when we think about what's going on in Europe, well, the euro is steadier. Stock markets today, though, were weaker, and Italy's market was about the weakest of all of them. And then in the commodity complex, oil prices are still reasonably steady. Natural gas prices were weaker just about everywhere. And we don't often get natural gas all over the world moving in the same direction on the same day, but we definitely had it today. And that is, I think, also beginning to price in that there is enough gas around, that there is obviously the potential for surprises along the way, but for the moment at least, the reserves in Europe are full, and cold weather hasn't been overly pressing. So certainly there's lots of charts to pay attention to right now.